It is the 3rd of June and we are talking to Leah Hall, Director and Accountant at Lift Accounting. Welcome, Leah.
Thank you.
We're talking all things, I guess, end of financial year, which is great timing. We actually did a deep dive with Leah last year, and we'll put a link into the show notes for tax tips for investors. And we went into a lot of detail. And so we'll put the reference into that. But today we're just going to talk about things that might be topical, things that everyone needs to know as we're coming up to end of financial year. So Leah, tell us what is happening on the 3rd of June for all things investors.
Yeah, awesome. Thank you. I don't think there's been a huge amount of change, but it's always a really good time just to look at the property, see what you do have in place, what potentially you can get in place to maximise your deductions. And so we're talking about things like depreciation schedules.
Yes.
You know, we've unpacked them before together. Do you have one? Do you understand them yet? Are you still putting your head in the sand and they're all a little bit too hard? They're not hard. So have a look at a depreciation schedule, especially if you've got a new or near new property.
Yep.
Because they're great non-cash tax deductions, you know.
Yeah.
It sort of feels like free money a little bit. Interest on your mortgage, you know, interest over the home loan on the rental property. There's some things there. If for whatever reason you've got a really large abnormal year this year, you've sold a property, you've made money somewhere else, then you might want to consider prepaying some interest.
Yeah, I've noticed a lot of people are prepaying this year
you've seen
in particular, and last year it wasn't as big a thing. Why do you think people are prepaying interest?
Yeah, so generally when I see it, it's in relation to having what I would call lumpy income.
Yeah.
Yeah, so the one-off event, because all you do, it's not magic. All you're doing is bringing a tax deduction into this year instead of next year. So you would only do it if your taxable income this year is really heightened comparative to the norm. So that is sale of a
property?
Yeah. That's normally it, Even sale of shares generally aren't that high an income to worry about it. So it's normally sale of a property that's a conversation to be had.
Yeah, so for any new investors out there that I guess this is their first time doing their tax as an investor, what would you say? What do they need to do differently now they're an investor than when they were just maybe a basic tax return?
I think this is where accountants can come in to be being worth their money. That's not a good thing for an accountant to say. But, the website's technology is built for the basic tax return to be done by the taxpayer. And I really encourage a lot of clients to do that, because if we're not adding value with our fee, then learn how to do it yourself,
Yeah.
So that's what I meant by that statement. So I think when you've got property, that's when it's sensible to invest in an accountant to help you do that so that you are maximising your tax deductions.
Yeah.
Because there's all different rules, repairs versus improvements. That's a huge one, right?
Yeah, and we went right into repairs in that episode of tax tips for investors.
That's right. And there can be so many things that fall in that grey and it's a bit of a brainstorm to see which way it's going to fall. Is it going to be a repair? Is it going to be an improvement? Have you done that many improvements that maybe we want a new depreciation schedule written up, So that's, I think, the biggest thing if you're a new investor into the market, get an advisor.
Yeah.
Yeah.
And maybe reach out before 30 June?
Oh, yes, absolutely. Yeah, just in case there's some things you can do,
Because I guess a lot of people don't think about their tax until the end of the year, but June's probably more important where there are things that I guess you need to take into account if you're self-employed or if you are an investor.
Yeah, that's right. And I see a lot of people reach out as they're buying the property.
Yeah.
So that could be in November. So we're well off the 30th of June, but they're reaching out and getting a bit of proactive advice. What do I need to keep? What can I claim? I'm going to do all these repairs before we put a tenant in, so I can claim all of those. No, you can't. So all those questions, or I'm buying it. I want to live in it to get, all the things you can get as you buy your own first home. How will that impact it then if I rent it out in a year's time, and all those sort of questions. So I find a lot of good investors will have some proactive advice up front. So they
and pre-plan it and sort of tax plan for before 30 June.
Yeah.
Just as you would if you were self-employed.
Yeah. And I think the other key one is also working with the broker accountant, talk to someone to understand how you should structure the loan.
Yeah.
Because that can make such a big difference for not just tax benefits but long-term wealth growth.
Yeah. And do you look at when your clients come to you and they're doing their tax for end of year and they've got an investment portfolio, do you look at their structure of everything and check? I mean, one of the big things is, have you moved that from your own home to your investment property if the value's gone up? Are you checking those things when they come in and sort of doing a bit of a health check?
Not if we're doing the tax return, it's not that deep health check, but I do myself and encourage my team, and some clients can get a little bit frustrated by it at times, but we'll normally ask all those questions. Do you have your own mortgage? What's the balance of that? Or there's interest earnings on their tax return. You're like, why are we earning interest when we've got a mortgage? So we try to give that more holistic viewpoint if the client's willing to hand over some of that information. But do we get all the all the bank statements and things and really assess them all? No, not as a tax return preparation. Not part of that process, but definitely there is an option, yes.
Yeah. So is there anything you think that you would want an investor to know before, I guess, doing their tax that they think, oh, that's a really good thing to take note of before you go and see your accountant?
I think I think they just should be open to asking any of their questions.
Yeah.
So I think people just get embarrassed to ask questions.
They do.
Yeah. It's nothing stupid. Like, we live in this space. They live in their business or, professional space. So they should be open to asking questions, because that's what we do.
Yeah.
Answer them. Yeah.
Yeah, great. Well, that's investors. So we might come back and talk about, I guess, some tips for the self-employed.
All right. Sounds good.
Hi, I'm John Pidgeon, founder and director of Envisage Property Buyers Agent Service.
And I'm Rachelle Kroon, founder and director of Sphere Home Loans. We also support this podcast.
This is a show for Australians that want to make smart and informed property decisions.
And to be kept up to date with the ever-changing lending landscape.
We would love for you to join the discussion in the Australian Property Chat Facebook group.
Thank you so much for joining the show. We are glad you're here. Now, I know that this is a property show and it's an investor show, but a lot of investors are actually self-employed, me included, you included, Leah. So I thought we'd do a session on, we have an accountant here with us. So I guess that we're coming up to tax time. What are some things that self-employed people specifically need to get ready in June? So whether they're investors or whether they're not, I guess for self-employed people, what do we need to be preparing?
Everything.
It's such a big month for us, self-employed people, June.
Yeah, that's right. And, I think you should be having the conversations and looking at your data more in May.
Okay.
Middle of May. So that, we need to have everything prepped for the end of the year, but then you already know where you're at. Because if you need to do anything, we need to be looking at things in May, making the decisions so you have June to do it. Now, I'm going to put a flag on that one in that it really drives me insane when people are like, oh, my accountant told me to go and buy a car. My accountant told me to go and spend money. It's maybe I just sit on the outside of my profession on that concept, but I think I flipped your question a bit, but I think that's what you shouldn't do. Is just
and I see that a lot. So I see people would come to us and maybe they want to buy another investment property and they can't do that now because of a servicing issue, and they've got this new big car lease, this $150,000 car lease, and it is because the accountant told them to do that. So tell me why you wouldn't do that, or why you personally wouldn't do that.
Yeah, so ultimately, you never get everything you spend. So if we keep it simple and you say, okay, Sydney Tools, they've always got the big ads, just promote them on the radio in June for tradies, come and get your tool packs, right? Yes. So if you needed that $1,200 hammer drill, then go for it. Buy it. If you're going to buy it over the next month, be it July or be it June, then 100% go and buy it. It just means you get that tax deduction a little bit earlier, right?
Yeah.
But you're not getting $1,200 back.
No.
So if you're in a company rate, it might save you around $300. If you're in personal scale, probably should have done these figures, maybe just over $400, right? But either way, if you didn't need that tool, you're still out of pocket by at least $800 odd. So maybe I'm a tired accountant, but I would have preferred to pay a bit of tax and keep my $800 than get a tool that I didn't need.
And what are your plans for that money before you go and, spend it on something just to save some tax?
Yeah, that's right. Let's actually look at our cash flow. But if we blow that up to that larger car, right, and I pulled a couple of little figures here together because it is a bugbear of mine. So if you go and let's keep it simple and you're buying a commercial vehicle, so 100% for work, not something that you and I are driving around in potentially that's partly for work. But if we're paying $80,000 for before GST for this vehicle, if you're in a company tax rate, in that year that you spend that $80,000, you're going to save about $5,300.
Yeah, okay.
And over the 7 years that you've got the car, then you'll save about $20,000. So you spent $80,000 to save $20,000. Now, if you need a car, especially when we're talking, commercial vehicles, your delivery driving or your tradies, you need that car. It's 100% for business. Then you need a car for sure. But if it's just a case of spend money to save tax, how does that make any sense at all, right?
Yeah.
We've got $80,000 spend to save $20,000 over a period of 5-6 years.
Yes.
It just doesn't make sense to me. And then you've got the flip side, and I've kept that pretty conservative, 80,000.
Yeah.
You've got the flip side of then what it does for your borrowing capacity. And if I put that then into the more realistic view, and you might have a $150,000 loan over the Prado that's running in, I'll keep picking on a tradie or a building business, right? And we've got a Prado running in it. The absolute maximum you're ever going to get back on that Prado, because there's caps, is $17,000 over 5 years. And that's if it was used 100% for business.
Yes.
So you could spend $150,000 on that car. You could spend $100,000 on the car. You could spend $250,000 on the car. Without any FBT complications or anything else, a maximum you were back $17,000. How does that make any logical sense?
So don't be buying things that you don't need to save tax.
Yeah.
Especially if there's other things that you might be able to use those funds for.
Yeah, that's right. So,
and we chatted about this yesterday. I have just bought some soundproof pods for my office.
Yep.
And that was a really big spend. And I made sure I bought it this financial year because I know this financial year is going to be one that is probably more profitable than next financial year. It's like, my accountant and I did some planning, and he said, well, if you're going to buy those things, do it now. Yeah. And I did do it now, but I needed those for my office. I need those pods to do business.
Yes, that's right. And that's where that is a sensible conversation to have proactively had with your accountant, because it's like, well, let's get that tax deduction now. And even if it was a big year or not, you're still getting the tax deduction now. Time value of money is real, right? You're going to pay less tax this year, more money in your pocket, rather than getting a tax saving in 12 months' time when we do the next tax return.
Yeah, and there's a difference too. I mean, if you're getting that loan just on car loans, I'm always so hard on car loans. But
Yes.
I would also probably, if you're going to purchase anything for your business, is to check your borrowing capacity as well, because a lot of people are doing two things at once. They are trying to save tax, but they've also got plans this year. So if you've got plans this year and you're going out and getting that lease, check with your broker if that's going to impact your borrowing capacity before you do it, because whether you're buying it in your business or out of your business, it's still impacting your borrowing capacity depending on what sort of policies you're using.
Yeah, absolutely. And the order of finance can make so much difference, can't it?
Yeah.
And I had a conversation like that with a client who's just come on board just the other week. I'm like, no, you just need to slow down. It's like, his partner needed a new car. Okay, can she just sort of, be really nice to the one she's got for the next couple of months while we sort,
other things out?
Yeah, some home refinance or investment property or whatever, and then let's worry about the car afterwards, because you'd probably be able to rattle off the figures, but it knocks your borrowing capacity down by so much, these equipment. So we're talking cars, but this could be equipment, right? It could be the new tractor or the spreader or the excavator or, whatever it is, machinery within the factory. That's the same concept from a borrowing capacity. So sometimes just by getting the order right, makes a very big difference.
Yeah, and I guess from our perspective, when we talk about debts, I just said whether it's in or out of the company, it can, or whether it's in the business or out of the business, can impact your borrowing capacity. For us, it's really different if it's in the company or if you're in a, like, let's say you're in a, you've got a, you know, a partnership or you're a sole trader and you've got, I'll pick on the Prado, I got a $150,000 Prado loan. If it's in the company, it's actually a lot easier to keep borrowing than if it is in your personal name or if you're in a partnership. It can change depending on the bank and policy. When people are getting a lot of debt, and I saw somebody recently that had a lot of equipment finance, they're actually an excavation business, and they had, I think it was $400,000 or $500,000 worth of, equipment finance.
Yeah.
But they were a partnership where if they had been a company, this would have been fine for them to keep borrowing. But because they were a partnership, they weren't able to. Is structure something people look at this time of year?
Yes. And it's something that I had as one of our tips is that if you haven't looked at your structure recently, you really should. And again, I'm seeing this with some new clients coming in and they think they're in the magical trust and potentially, your structure was probably right when you started, but is it still right now? And so looking at your structure is really important. And I think having a team, I just learned from you what you were just saying then. So having a team, if you are that excavation gentleman you're just speaking about, have a broker on side, have an accountant on side who can talk to each other so that you're getting the outcome that's going to be right for them, because his equipment loan is necessary. It's not $150,000.
It is, yeah. They need all those equipment finance. But had they put, had they changed their structure last year to be a company rather than, being a partnership, their personal goals of upsizing their home would have been able to be met.
Yeah. So again, it's proactive conversations, you know, that's sort of going in that full circle again. It's proactive conversation now, not just let's look at your profit and loss, how much tax are you going to pay, but proactive conversation of what do you want to achieve over the next year, because it's not always tax. It's not always tax focused.
And that's it. Where you said what do you want to achieve over the next year, would you want your clients to come and say to you what they're planning over the next year now so you can take that into account when you're doing their tax?
Absolutely.
Yeah.
And definitely have the relationship with some clients, but some not. We're just still that factory of just get my tax done, move on. Limited advice, just, get my taxes done, tick that box, we've got the rest covered. But, much more we prefer to work with the businesses who are open to sharing their plans, talking about their goals and making proactive steps. And I think they're more successful.
Because sometimes your personal goals and your tax goals don't align.
Yeah.
They don't align, but we need to meet some sort of compromise, and we do this a lot. But my goal, in my ideal world, I'm seeing a set of drafts.
Yeah.
And I'm talking from a mortgage broker's perspective, I want to see drafts before they're lodged, because a self-employed person is stuck with those returns for such a long time once they're lodged. You might be doing your tax in, next month in July, but you could still be using that same tax return the following December.
Yeah, you can get till pretty much the December after, isn't it?
So it's such a long time.
July of 26 can get you through to December of 27.
Yeah. So I sometimes think I want to see them before they're lodged. I want to know if my clients are going to be doing anything that year. I want to see your tax before it's lodged. Do you ever get clients saying, I want, my broker or my bank wants to see the drafts?
It's infrequent that the client probably says it. It's more frequent that we would say,
yes,
all right, let's not finalise any of this. Can you send this through to your bank or broker, whoever they're working with, and feel free to pass on our details if they want to talk to us.
And that's where I guess working together is so important.
Yeah, absolutely.
Yeah. So if you're an investor and you're also a business owner, probably more important. But even if you're not a property investor, even if you're just thinking about upsizing your own home, this is the time to talk to your accountant about it before they actually do your figures.
Absolutely.
And can things be changed at this point?
When we're talking business, it's your hands are much more tied in relation to individuals.
Yeah.
But when we're talking business, absolutely.
Yeah.
Absolutely. You just look at it strategically and see what we need to do.
So let's talk tips. Let's talk tax tips for self-employed. What would your big tax tips be for a self-employed person, I guess, for June before they're actually going to, lodge their tax return?
Yeah. Okay. So we've got some flexibility around reporting with small business. So that could be we're reporting on cash. So that means when is the money coming in versus when is the money going out?
Yeah.
As opposed to who have we invoiced and who's invoiced us. Do you know what I mean? So if we want tax goggles on and we're in this year of really high profits, then potentially we could look at putting you into a cash system. So if you've raised an invoice towards the end of June, you're not yet paid for it, then you are not paying taxes on it yet.
Tell me what a cash system is.
So that just means we're only paying tax when you receive the money.
Yeah.
We're not paying tax on it when you invoice the money.
Okay, and
As a small
I
business,
didn't
you
even
can
realise
have
there
a
was a
choice.
difference there.
Yeah, and I guess in your industry, it doesn't really make any difference, right? It's rolling through.
Yeah.
But if you think of a industry, I'm on a builder train today, aren't I? But if you're a developer, builder, so you're raising $500,000 progress payments.
Yeah.
That's a big difference. It's a
It
big
is
difference.
a big difference.
And in that vein, I've just been asked to review some financials for a client in that industry from a prior accountant, and they were paying on accruals, meaning they raised the 500K invoice on the 26th of June. That's gone into their trust as income. So, of course, their income was up by 500K, big tax bills that they weren't planning. But on the other side of that, there should be, I'm positive that they owed their supplier money, right? Their frames and trusses and the subbies and all the things that they had to spend to earn that 500K, but that wasn't brought in. Now that's, I'll say pretty dumb, but that's gone through an accountant and tax returns are lodged. So
And it's too
these
late
things happen.
then.
Maybe we'll do a review, but it just we can make the assessment, see if it's worth it for them.
Yeah. And what about is there anything different this year for self-employed people that maybe differs from previous financial years?
There hasn't been too many changes, really. The small business, the $20,000 asset replacement is still around. So that means if you purchase an asset up to 20K, then you can claim it 100% in the year of purchase.
And that's the instant asset write-off.
Yes,
Yeah.
thank you
And that
for
was
giving
the
me
one
that word.
that was the one that was really big in COVID
Yeah,
times.
yeah.
Because I used that it was a really big asset.
It went up to 150,000 there for a bit. So it's jumped around so many times.
it's 20,000?
35. It's 20,000 right now. And it's only currently legislated to stay around to the end of June. We'll find out.
Do you think they'll extend it?
I think they will. It's just been around for so long,
Yeah.
but we don't know. It'll be sort of the budget announcement to let us know if that's going to be extended. But that's a good one to keep an eye on.
Yeah.
Because if that isn't extended and it's down to $1,000, that's traditionally what it is for small business, is $1,000, then and you're looking at a new trailer for 16 grand, well, there's that timing conversation, right? Let's get it in June. Otherwise, that 16 grand trailer is going to be written off over its effective life, maybe 7 years if you buy it in July.
Yeah, and that's the time cost of money too. I mean, you want to have it
Absolutely.
as quickly as you can to be able to write that off if you need to buy that asset.
Correct. Yes. Back to that. Yeah.
Yeah. So tell me, are there things that people can claim that do you think people they miss when they're doing their tax, especially from a self-employed person? What are the things that are, I guess, commonly missed or even claimed that shouldn't be?
Claim that shouldn't be could be a whole nother session.
Let's park what shouldn't be.
Yeah. But things that I can question a lot of times with people that aren't in there can seem so simple, but things like your mobile phone, because they're just still paying it out of personal funds that isn't coming into the business account. Things like travel.
Yes.
And then also some home office and things like that. So as a small business owner, we know we take things home, doing the
All the
admin
time.
at home and stuff like that. So, they're not changing your world in tax deduction wise, but it all adds up.
Now, when you said travel, I just realised something we missed when you talked about investors.
Yep.
There's been a change with travel and investors, hasn't there?
Yeah.
It was a while ago.
Yeah. It's been around for a couple of years, but we can claim nothing in travel anymore as a rental property owner. So what that means is if you've got a property 100 kilometres away, then we used to be able to claim some kilometres to travel to inspect the property, to meet with the agent, to buy the property, to maintain the property. We can't claim any of those.
So there's none of that anymore, but as a business owner, that's very different.
Absolutely.
Yeah.
Yes.
You can go anywhere as a business owner and claim it.
for work purposes.
Amazing. So what would your, it sounds to me like getting prepared in June is really important. So we're on the 3rd of June. You would say to reach out to your accountant now and prepare if you haven't already.
Absolutely.
Amazing.
Yes.
This is Property is brought to you by Sphere Home Loans. Sphere Home Loans is a mortgage broker that helps our listeners all around Australia. So, if you want to get into your first home sooner, looking at upgrading, an additional property, or want your current mortgage reviewed, just search Sphere Home Loans or click the link in the show notes, and their dedicated brokers will be able to help you wherever you are. If you are, however, after personal financial advice, don't get it from a podcast. If you would like help based on your own personal situation, head over to moneypodcast.com.au, click Get Help, and we'd be happy to introduce you to one of our trusted professionals. That's moneypodcast.com.au and click Get Help.
So Leah, we're recording this episode just before the federal budget is released. So we actually don't know what's happened yet. But by the time this airs, it's going to be the 3rd of June. So the budget will have come out. Obviously, we don't know what's going to be in it. But tell me a few things that are actually being discussed and how that may impact both investors and small business from your perspective.
Yeah, it's a huge one for investors. Not much has been out in the media and politicians talking about for small business other than and it feels like it's been every year for probably the last 10 years, is the instant asset write-off, which we just mentioned a minute ago.
So they're considering scrapping
20K.
that?
Well, it's just that right now it's legislated to end on the 30th of June, which means it would revert back to $1,000. So that's not even an iPhone, you know.
Yeah, not even.
No, instant asset write-off from the 1st of July. I feel like it will probably be extended. Hopefully it might even be increased. Business owners who are listening might remember that it was 20,000, it went up to 35. During COVID, it went up to like 150. It came back to 50, back to 30, back to 20. It just seems like a little play toy that gets thrown around in each budget. So I would expect that it will continue because I think it's a nice benefit for small business owners to access that. I think the really big point, and we've all seen it, I'm sure even in people who don't have investment properties have seen all the hype around changes to CGT. I think the other one is in relation to negative gearing on properties. There's been some talk around capping it at a maximum of 2 properties.
I did hear that.
So that will be interesting. You know, it's all speculation, but that is one that's out there and it will make a change to people who own more than 2 properties.
Now, there's a lot of noise out there from the holiday home owners. Mm-hmm. Tell me about that.
So this is essentially in already.
Is
and
it?
I just think it's just been a little bit under.
So they're not waiting for the budget for that?
No. This legislation is drafted. It's just sort of waiting for approval to go through.
And tell us what it is.
Okay, so if you have a holiday house, so definition being that you utilise that property for personal use.
At all,
ever. Then in any year, if that property was not available for rent for external parties and you utilised it, then you cannot claim any of your holding costs. So holding costs are interest on mortgage, land tax, rates.
That's huge.
Strata. Yeah. So what can you claim against rental income? Items in order to earn the rental income, cleaning fees, agency fees, advertising. That's probably about it.
So let's use an example. I'm going to use a real example. So I have a client who has a house they live in New South Wales. They have a house in Melbourne. They used to live in Melbourne. Yep. And they rent that out about 70% of the time. But at Christmas and Easter, when they visit their family in Melbourne, they stay at that property. So it's available to rent 80% of the time and they've got a loan against that property.
Yep.
That would no longer be tax deductible at all.
No. And the way the legislation's written at the moment is that particular customer already has the property, so that's grandfathered until the 2027 financial year.
Which is next month.
Yeah, that's right.
Yeah.
And when I say that, it means in the 27 financial year they have to comply with the new law.
That is probably I think that's bigger than CGT or negative gearing.
Yeah.
Because it's a huge amount of people.
And I feel like it's been slipped through on the quiet. I haven't even heard much about it as such in our industry, but it's there, and it's not speculation. This is it.
Well, if you have a house that you stay in at all and it
Yep.
is an investment property, I would reach out to your accountant now and
Yep.
maybe have a chat about that.
Absolutely. Yes.
Amazing. Thank you, Leah.
No problems.
So, Leah, tell me, whether you're an investor or a small business owner, what are the biggest tax mistakes that you're seeing people make?
Cash flow.
Cash flow?
Yeah, like literally just planning in relation to their cash flow for taxes. But very topical right now with cash flow is the introduction of payday super.
Tell us about that.
So from the 1st of July, so next month, you must pay, so this is business owners, sorry. Yeah. So you must pay your employees super every time you pay them. So if you're on weekly payroll, then you must pay their super every week by law.
And that comes in July.
Yeah.
So we, at the moment, I pay fortnightly, but I think I pay my super monthly.
Yeah.
So I can't do that now.
No. And legislation right now is quarterly. So a lot of business owners pay their staff superannuation quarterly.
And would have cash flow plans for that.
Yes.
Yes.
Hopefully. So if you are that business owner who is paying quarterly or even monthly, I'll pick on you. So we get it to next month and you process your you've got, a couple of weeks into July before you actually need to pay that superannuation for the month of June. And it's normally a significant amount of money, right? So you've got the cash flow there for that. But then the first week that you pay your staff in July, my apologies, is you also need to pay their super on that week as well. So if you don't have cash flow in your business, you're really going to struggle to pay, let's put you into a quarterly cycle, April, May and June super, plus pretty much every week in July, all in that same month.
Yeah. So you really need to plan
Yeah.
a lot more with these changes that are coming in next month.
Absolutely.
And when you talked about cash flow being the biggest mistake, I mean, I guess when you were talking about the current state of play, cash flow is probably more, I guess, important, and everyone's talking about it, whether you're a self-employed person, whether you're an investor, or even if you're just running a household budget. Cash flow is everything at the moment. What are some tips for self-employed people to get on track and to make sure that they're prepared for whatever is going to come?
Yeah. Yeah, it's an interesting time, isn't it? I think we all need to have a bit more cash flow available to us now than we do in normal times, if there's such a thing as that. So, and as you say, be it household expenses, be it business overhead expenses, I just think that there needs to be more cash in your reserves because there's things happening in the world that we don't have control over. And also having knowledge over your costs and how things are impacting you. Like even as we're recording, if you're relying heavily on freight or driving, then, I would hope that there's already been changes put into your business, pulling in other costs, just being very aware, changes in, what you're invoicing clients and things like that. So it's always important, but I think in the current times, it's even more so. And I would think you should have a good few months, maybe a good 3 months of cash flow reserves.
We say 3 months too.
Yeah.
Yeah.
In the account, just to give you some breathing space. That provide you, like I know that's, I would want that in my account right now.
Yeah, absolutely. And anything else that you think people need to consider?
Yeah, so if we sort of move on from the current world and the climate that it's providing us, all the normal tax things, right? And I know this isn't mind-blowingly huge information, but again, it's knowledge is power and it's understanding where you're at. So what I hate doing, and again, we're talking here in May, is I will still have clients coming to me now, new clients, new people in business, and they haven't done last year's tax, right? So that's
Yes.
2025 financial year. And they're coming to me now. Normally because they're confused. Confused, scared,
Head in the sand.
Head in the sand. They don't know what's happening. So, and if they've had a successful year, which, you really hope they have, there's going to be a tax bill. So that could be $5,000 or it could be $50,000. But for either end of that scale, it's still a lot of money. But what happens is because they've seen us now, we're so far behind. That's their tax bill from 11 months ago.
Yeah.
And then the next thing, the ATO is going to give them a June instalment of exactly the same amount of money for the current year. They want the current year up front. So in this next 6 weeks, they're paying 2 years worth of taxes and they've got no idea, so they haven't budgeted for it.
Yeah. And if you're also compounding that with different costs that are increasing, which everyone's getting hit with all of these extra costs, that can really get people
really hard
into a tricky situation.
Yeah. And generally they've lived their lifestyle in spending that money, So it's just be proactive and don't put your head in the sand. Talk to someone, because if they spoke to someone this time last year, they'd already have that $550, however much it is, put aside in a term deposit in their offset account, wherever it might be. They still don't like paying it, but they've got the money there, right?
Yeah.
And then they're on top of things for this year and you're not digging yourself out of a hole.
Yeah, great.
Yeah.
So I would say our tax tips are pre-plan.
Yep.
Have your cash buffers aside, which we've been talking about that for properties, but I guess it's the same for business owners.
Absolutely.
Cash aside, and have your team work together for the plans that you've got in the next 12 months.
Absolutely. A team it's just essential. I could sit here and talk half an hour with the stories I've had in the last month of them not having their team. So we're talking
aligned.
Yeah, broker, financial planner, accountant, whoever it might be, aligned and also talking to each other.
Yeah.
If they're not talking to each other, then whoever's breaking the cog needs to maybe be replaced.
Yeah, fantastic. Well, thank you for all of those end of financial year
Thanks
tips.
for having me.
Now, we were just chatting and Leah's actually going to put a landing page on her website with some reference material that will be specific for the budget, which would have been released at the time that this airs. So, yeah, thank you so much for organising that. And we hope that you are getting prepared for your end of financial year. So thank you for checking out this episode with Leah Hall from Lift Accounting. You're with Rachelle Kroon and this is Property. If you're looking to buy your first home, you need a strategy. Whether you're buying to live in or for an investment, my book, The Quick Start Guide to Your First Property, is for you.
And if you're serious about building your investment portfolio, I've got a book for you, Sort Your Property Out and Build Your Future.
Both our books are available wherever good books are sold.